Hello, Parkland, USA, and welcome. This is our third quarter town hall. We decided to mix it up a little bit. And what we're going to do with this one is focus on, now that we're getting into the holiday season, really talk about what the rest of the year looks like and moving forward into 2023. So with us today, we're really thrilled to have with us Jay Erickson, who is the interim president for Parkland, USA. And Jay, glad you're here. Thank you.
Thanks, Laura. I'm really excited to be here as well and kind of talk to the team about, fourth quarter and kind of going into 2023 and some of the exciting things that everybody's working on.
All right, well, let's dive right into it. So this is a period of transition for Parkland USA, and one that I think is moving us a bit from the fast-paced growth that we've been on to one that's really zeroed in on delivering on the core business for right now. And the good thing is the core business is strong and healthy. So what can we continue to do to deliver some good results there?
Yeah, so Laura, great question, because I think, we've been talking a lot about 5 by 25 and I would say it's probably more 5 by 26 right now. And let me talk a little bit about why. And so, everybody I'm sure has heard about rising interest rates. And so we've had huge inflation. Inflation's been so high that everything we buy is more expensive. And I'm sure that you see it when you go to the grocery store and that same product that you bought 3 weeks ago is now 30 more cents or 40 more cents than it was the previous week. And so so things continue to go up. And so what the U.S. has done is they've raised interest rates to really kind of slow down some of that growth so that our inflation is not out of control. So, we've seen that across our business, and that impacts us in a number of ways. And so, the price of everything that we buy costs more for us. And so we may not make more money on something because it costs more. Our margin might be the same, but we have to spend more money. And so sometimes that kind of increases our debt or reduces our cash flow. And so I'll get more into that. But yeah, we have a war going on in Ukraine, and that's really hitting markets in a lot of different ways. We have the rising interest rates and inflationary pressures. We have a possible recession coming in not only the U.S. but in multiple different countries, and so and when we look at our stock price has been a little soft. And so, our investors are kind of telling us a few things. Our investors are telling us that they want to see our stock price grow and get up, and they want to see us give them more dividends. And so over the next couple of years, and it's 18 months to 24 months, we're really going to focus the organization on buying back shares. And so when you have a certain number of shares that have been issued out to for our organization. And so as we buy up more shares, which are at a really good price right now, it makes each share worth more. And so that will help our shareholders be happy with the fact that share price is rising. We also want to make sure that we're paying out dividends and rewarding people who own our stock with dividends. And then at the same time, looking at how much debt do we have? We typically keep between 2.5 to 3.5 times debt to earnings, and we want to stay in there. It's kind of our sweet spot. If we spend more than 3.5, sometimes it costs us a little bit more money, and people get worried. And if we can get that number down, it actually helps us with interest rates and helps us with our investment grade of our company. So what we're going to be doing is we're really going to kind of batten down the hatches a little bit. I guess you would say is, if there is a recession coming, we want to be in the best place we can and make sure the company's in a really good spot, which it is. It's a very good company. We have a great core business, but like anything else, if you we're going to buy a house and interest rates were really high and you thought maybe the housing market was going to soften a little bit, you probably would hold off buying that house. It's kind of the same way that we look at acquisitions, and that, the prices of acquisitions and things like that have continued to rise. And so what we don't want to do is buy something that potentially might come back down and at the same time going into possible recession. And so being very prudent, but there's so much work to get done, Laura. we've done 8 or 9 acquisitions last year. So we did 3 times the number of acquisitions last year that we would have done. And part of it was that people were worried about taxes and how the tax code might change. And so they really wanted to divest their businesses. And so we bought 3 times more than we would have. So really, it's not that, we're still spending the same money, but we spend it up front versus, kind of putting it over the next few years. And so the next few years, what you can see from us is focusing on organic growth. And some people are probably saying, what is organic growth? Organic growth is just looking at our core business and figuring out how to continue to drive more sales and to get better at our core business that we have today. It's all of our markets, it's all of our trucks, it's our branches, our stores. How do we maximize that business? And so there's a lot of opportunities there. It's really getting common with our processes, our systems, and how we do stuff. And I think everyone that's probably on this call knows that, if you're in one rock, you maybe do it one way. If you're in another rock, you maybe do it another. And what we want to do is get that common, get everything common. So when we do have the opportunity to do a big acquisition, and the hope is that we could do up to a $1 billion acquisition in 2 years. We want to make sure that we have everything ready for that. And that means, and so when I look at the next couple of years, I'm thinking there's going to be a lot of work, but it's a lot of good work. And so we can't really kind of take a break. We need to get all this work done so that we're ready for that next big acquisition. So, but it's exciting because all the things that we need to fix and get ready, they're going to give us some time to kind of fix those.
Well, and that time really is a gift of time, I would say, because of all the acquisitions we've had in the past, to allow us to further get those processes and procedures and systems really humming the way that you indicated. So how can we make the best use of that time?
Yeah, so really is let's identify the best practices. Let's make sure that we figure out what's the best way to do it, and we all kind of lean in and share those best practices, and know that, hey, you know what, if we can all get on the same page, it makes it so much easier, because one difference when you work it all the way through the chain, it might impact tax differently. It might impact finance different. It might impact IT differently. It might impact. So one small difference actually really impacts the entire organization and creates a lot of extra work. It creates errors. And so, yeah, so if us as a team can get on the same page and start using best practices, it will make us. It'll simplify the process, and it'll also make it easier for us to execute, which then gets us that best practice for the future.
So we're about halfway through fourth quarter already.
Yeah.
Thanksgiving is coming up. How can we best make use of the rest of the fourth quarter to help us achieve our goals?
Yeah. So as I talked about, the core business is strong. I think 3 of the 4 rocks are at business plan, and we've had some one-time hits that we had to take in one of the rocks as a catch up from 2021. But we're, like I said, the core business is strong. What we can do is really look at, as I talked about earlier, about cash flow, and if we buy something. We go out and we buy a product and then we sell it. So if we can make sure that we're not buying too much of something. So, when I think about stores, like if we have, 200 cans of something that maybe we sell 2 cans a week, or we sell 2 cans a month, and we have 200 cans, that's a long time before we sell those 200 cans. So let's make sure that we're ordering correctly and that we're not carrying inventory. Let's move it around to other stores. Maybe we can send it back to the distributor. But let's be prudent with, what we're buying, and making sure that we're selling it in a timely manner. The same thing is if, let's say, a fuel delivery. The sooner we can build that fuel delivery out and get paid for it, the sooner we have that money in our account. And if we buy something and then it takes us, 30 days or 60 days to get paid, that's an expenditure for which, is money that we could be using it for other things. And so what we want to make sure is that we're being good stewards of our dollar, and that we're billing out all of our deliveries as soon as possible, every day, kind of getting into that cadence. Sometimes at the end of a month, maybe we wait 8 days to do some billing because we're closing out the month. What we need to do is get into that cadence of billing out every day, so that we can stay caught up, because those dollars that we're spending, especially with the price of fuel and the price of oil, are very, very expensive. And so the quicker we can get paid, we'll also be looking at our credit terms. If we can extend our credit terms out a little bit, gives us a little bit more time to pay as well. So managing our inventories, making sure we're billing on a timely basis, ordering correctly, and making sure that we don't want to be understocked, because if we don't have it, we can't sell it. But not having too much, and just really looking at our expenses and saying, do I need to order 10 of these if I only need 2? We don't need to have 2 years worth of toilet paper. I think we're going to be okay with toilet paper going forward, but we don't need 2 years worth of paper towels in stores as well. And so let's just make sure that we're ordering as needed, and that will help us as from a cash flow standpoint and a working capital.
And then just any final messages with the holidays coming up on us, and any good wishes you'd like to send out to all of our coworkers across the U.S.
Yeah. So what I would love to say is, we are so proud of what everybody has accomplished this year. And so we've had some challenges. We've had some things with some changes. The economy's been a little crazy with oil and inflation and all that. And you know what? We have still put up a very strong year. We still have a lot to be proud of. And I just really want to say thank you from the leadership team to everybody for the great job you've done. You've weathered a lot of these storms, and our future is bright. And I just want to say happy holidays. I hope you get some time off to enjoy with your families. But we couldn't be the company we are without you. Every one of you is an important piece of Parkland. It's truly one Parkland, and I just can't say thank you enough to the entire team for everything you've done. And I'm just so excited about 2023 and what we can deliver on in 2023. I think the future is really, really bright here, Laura.
I absolutely agree. Thank you so much, Jay. Really appreciate your comments. Best wishes to you this holiday season as well, and everybody else on this call. That will conclude this third quarter update. We hope everybody has a great rest of the day. Thanks so much.
Thank you.